Hello and welcome to Finance Conversation. This is already the 7th episode of the Merging Life and Money Show, and I am super excited to be here with you. If we are meeting for the first time, I am your host, Marie-Jo César, and I thank you for joining in today. If you are watching the replay, make sure to type #replay in the chat and leave me some comments and questions. Welcome, welcome, and welcome. I come to you live every Thursday at 5 p.m. Pacific Standard Time to share valuable information about how to achieve financial wellness from the inside out and live your life with means and meaning. Today's show is the 6th in the series entitled How to Build a Secure Financial Plan. I will continue exploring step 5 of the process, which is the need for insurance. So grab a pen and a notebook as I will be sharing tips and ideas that you might want to write down. And if you have any comments or questions, make sure to put them in the chat. And if you want to talk to me directly, I will share my contact information at the end of the show. So far in the How to Build a Secure Financial Plan series, I talked about 5 keys: financial mindset, the importance of having a budget, how to eliminate debt, the importance of savings, the importance and the need of insurance. So last week about insurance, I explained how it works, the various methods of risk management, and how to develop your insurance plan. And today, instead of addressing the potential risks that could affect your financial security, as I promised last week, I decided to talk about the 7 types of insurance that you wouldn't ever need. And when I promise, when I complete the How to Build a Secure Financial Plan series, I will do an insurance series simply because insurance is such a broad and important topic that it is not always explained to most of us and understood by most of us. So let us begin for today. The ability to absorb a financial shock to your life, your family, your income, your health, your property, or your business should be part of your financial wellness plan. You are working mighty hard to build a solid financial footing for you and your family, so you want to be sure that everything is protected against accidents, disasters, and catastrophic illnesses to avoid a financial tragedy. Insurance provides protection from financial loss and mitigates the risk that we all face at some time in our lives. Many of you do not want to buy insurance, that I know, as you hope to never need it. But you will be glad you have it if and when unforeseen, unexpected, and unfortunate events occur. There are so many types of insurance policies out there. And if you don't know which ones are relevant to your situation, you could find yourself spending a large part of your budget on insurance premium payments, some of which you won't even need. So let's look at the types of insurance policies that just about everybody should buy because they cover 3 main areas of insurability concerns: you and your family, your property, and your car. Let's take a look at what they are. They are disability insurance, term life insurance, health insurance, long-term care insurance, homeowners or renters insurance, auto insurance, and personal liability insurance. We invest in insurance to protect our home. We put a lot of time and energy into making them comfortable, and we invest a lot of love in making them ours. A home is so much more than the walls that surround it and the furniture that fills it. They are worth a lot as well, both in the money we pay for them and the money we owe on them. So it is reasonable to use insurance to protect our home. But there is one valuable item in your home that you often overlook when it comes to insurance. In fact, it is one of the most underinsured items that there is. This item is crucial to your earnings, to your family's happiness, and to your family's future. This most underinsured item in your home is you, right? You insure your home and your car, but nothing is more important than your life and your ability to make a living. The money-making machine, which is you, must be protected. So please, insure your greatest asset. As you move through life, you find a partner, raise a family, and maybe start a business, the importance of insurance increases. That is because insurance is all about providing a financial safety net that helps you take care of yourself and those you love when you need it the most. So, what type of insurance do you need to insure you, the money-making machine? You need disability insurance. It is the one type of insurance most of us think we will never need. Yet, according to statistics from the Social Security Administration, 1 in 4 workers entering the workforce will become disabled and will be unable to work before they reach retirement. So disability is a type of insurance you would purchase to protect your income. An unexpected disability can financially cripple you. As a result, you want to make sure that you have disability insurance as it covers you for injuries and illnesses that occur both on and off the job. The coverage can be short or long term and can be purchased through your employer if you are employed or individually if you are self-employed. Disability insurance will provide you with funds that will enable you to buy food, pay bills, and cover household expenses while you are unable to work. All right? Disability insurance is one of the only ways to continue collecting money if you are unable to work due to injury or illness. It is also very important if you are self-employed or if you are a small business owner, because an injury or illness can prevent you from earning an income from your business activities. And you may need insurance benefit to keep your business afloat while you recover from your disability. So to work out how much income protection you need, prepare a budget. This will help you see your monthly expenses and the income you will need to replace. Now, the next type of insurance that you would need to protect yourself is term life insurance. Some people refer to life insurance in general as death insurance because it insures you in the event of your death. Term life insurance is a relatively inexpensive way to provide money for your family if you die while the policy is in force. It must be noted that life insurance does not fulfill the need for disability insurance and vice versa. Life and disability insurance complement each other, as one does not replace the other. So what is term life insurance? Term life insurance is a contract between you and an insurance company that lasts for a specific period of time, such as 10 years, 20 years, until you reach the age of 65. In exchange for your premium payments, the insurer pays a death benefit to your beneficiaries if you die during the term of the contract. Term life insurance does not have an investment option or build up cash value that you could some days borrow against. This is the main reason term life insurance is cheaper than whole life insurance. With term life insurance, you generally just pay for the potential death benefit. And as I said earlier, previously, I will address life insurance in greater details later in my next show series that will be completely dedicated to insurance. Many financial experts consider life insurance to be an integral part of your financial plan, as it can help you be prepared for the worst. How crucial is it to include it in your planning? Depend on your circumstances, and its need varies and changes over time. So when estimating the amount of life insurance coverage you need, remember to factor in not only funeral expenses, but also daily living expenses. This may include mortgage payments, outstanding loans, credit card debts, taxes, childcare, and even future college costs. So what should you know before you buy life insurance? Your ability to buy life insurance depends primarily on your age and health. The younger and healthier you are, the lower the cost is likely to be. You may need to complete a medical exam, but some life insurance companies do offer no exam life policies. If you are unsure whether a life insurance policy would be beneficial for you, make sure to evaluate your needs by asking yourself the following questions. What immediate financial expenses would my family face when I die? Think about outstanding debts, as I said, funeral costs. So how long would my dependent need financial support for if I were to pass away today? The other question that you should ask yourself is, would I want to leave money for important but less urgent expenses, such as my child's education, inheritance, or even some charitable giving? And also, before buying life insurance, make sure to check a rating company such as AM Best or Standard & Poor's to confirm that the insurance company you are contemplating using is financially stable. The next type of insurance you must have is, guess what? Health insurance. Even the healthiest people can fall sick without warning and require expensive medical treatments. Therefore, being financially unprepared to tackle the cost of the necessary medical procedures is definitely not an option. This is where comprehensive health insurance plans come into play to ensure your financial comfort and that of your family. But with rising copayments, increased deductibles, and dropped coverages, health insurance has become a luxury fewer and fewer people can afford, unfortunately. Do you know that the national average cost for one day in hospital was nearly $4,000 in 2020? So when looking at those kind of amounts, even a minimal policy is better than none. Many of us are fortunate to have employers who offer group health insurance that is partially or fully paid as an employee benefit. But if you are self-employed or your employer does not offer health insurance, you must purchase an individual health care policy, which covers you and your family. So let's drill down a little bit in this handy financial tool called health insurance. So what is health insurance? Health insurance is coverage for medical expenses, okay? Depending on your policy, it may pay some or all the costs of doctor visits, prescription drugs, hospital stays, and surgical procedures. The premium you pay for health insurance is a tax-deductible expense. In addition, you can put aside pre-tax money in a health savings account or flexible spending account to cover out-of-pocket expenses. So why do you need health insurance? Without health insurance, getting sick or injured could mean going bankrupt, going without needed care, or even dying needlessly. Okay, nothing could be truer. Here is why you need health insurance. It pays for future illnesses, your medical treatment, without depleting your savings or negatively impacting your family's financial future. Medical costs are increasing rapidly. And for those with insufficient savings, affording medical care becomes a problem during emergencies. In many cases, health insurance covers hospitalization costs, ambulance costs, consultations, medicines, tests, and post-hospital expenditures. Health insurance could also give you access to discounted medical services with network hospitals, doctors, pharmacies, and other caregivers. And last but not least, it keeps you and your family worry-free as long as you pay your premium. I would like to add as well that when traveling abroad, make sure that your current health insurance will cover you while traveling. If it does not, I would recommend that you purchase travel medical insurance. As the language barriers, sky-high costs for treatment, and the stress of dealing with a foreign medical system will only be worse if you have no insurance. Okay, another type of insurance that you must buy is long-term care insurance. Chances are you will live well into your 80s, your 90s, and possibly even longer. When you live a long life, the likelihood you will need long-term health care is greatly increased. Just like long-term disability covers lost income, long-term care insurance covers much of the cost of nursing homes, assisted living facilities, or in-home care. So if you become unable to care for yourself, a long-term care insurance policy will provide contracted benefits to help you pay for professional care. It might be hard to imagine now, right? But chances are you will need some help taking care of yourself later in life. The big question is, how will you pay for it? Well, the answer is to buy long-term care insurance. So why do you buy? According to a recent survey done by the Urban Institute of the U.S. Department of Health and Human Services, most people will need services for less than 2 years, and about 14% will require care for more than 5 years. It must be noted that regular health insurance does not cover long-term care. And if you don't have insurance to cover long-term care, you will have to pay for it yourself. So 2 main reasons for buying long-term care insurance are: 1, to protect your savings, right? Long-term care costs can deplete your retirement nest egg real quick, as a median cost of care in a semi-private nursing home room is almost $90,000 a year, according to a 2018 cost of care survey. And the second reason is to give you more choices for care. The more money you can spend, the better the quality of care you can get. If you have to rely on Medicaid, your choices will be limited only to to the nursing home that accept payment from the government. Medicaid does not pay for assisted living in many states. Okay, so far I talk about the type of insurance that protects you and your family, and they are disability insurance, term life insurance, health insurance, and long-term care insurance. Now I will talk about the type of insurance that you need to protect your property. So what is property insurance? Property insurance is a broad term for a series of policies that provide either property protection coverage or liability coverage for property owners. Property insurance provides financial reimbursement to the owner or renter of a structure and its content in case there is a damage or theft, and to a person other than the owner or renter if that person is injured on the property. So property insurance can include a number of policies, such as homeowners insurance, renters insurance, flood insurance, and earthquake insurance. So how property insurance works? Events covered by property insurance typically include select weather-related affliction, including damage caused by fire, smoke, wind, hail, the impact of snow and ice, lightning, and many more. Property insurance also protects against vandalism and theft, covering the structure and its content. It provides liability coverage in case someone other than the property owner or renter is injured while on the property and decides to sue. Property insurance policies normally exclude damage that result from a variety of events, including tsunamis, flood, drain and sewer backups, seeping groundwater, standing water, and a number of other sources of water. Mold is also usually not covered, nor is the damage from an earthquake. In addition, most policies will not cover extreme circumstances such as nuclear events and act of war and terrorism. Now, I mentioned that homeowner insurance was part of your whole property insurance. So homeowner insurance is a form of property insurance that covers losses and damages to your house and your assets in the home. It covers 4 kinds of incidents and on the insured property: the interior damages, exterior damages, loss or damages of personal assets, and injury that occurs while on the property. So, what are the risks associated with home ownership? Many homes and the personal property within them are underinsured, primarily because they are insured for the amount you paid for them rather than the cost to replace them. So as your home increases in value over the years, you are assuming more and more financial risks. So please review your policy regularly to make sure that your home property is adequately covered. The next type of insurance that you must purchase is automobile insurance if you own a vehicle. Basic personal auto insurance is mandated by most states in America and provides you with some financial protection in case of an accident. But is it enough? And what are the options? So how does automobile insurance work? Automobile insurance covers you in the event you have damage to your own vehicle, in the event that you cause damage to another person's property with your car, or injure someone with your car. So there are 3 types of auto insurance coverage. Liability coverage. This helps pay for damages in the event of a collision causes injury or property damage. Then you have collision coverage. This is insurance to help pay for repair or replacement of your vehicle when it's involved in an accident. And you have comprehensive coverage. This covers damages to your car that is not caused by an accident. For example, theft, vandalism, flood, fire, or hail. I mentioned a few moments ago, basic personal auto insurance is mandated by most US states. And if you are financing a car, your lender may also have its own requirement. So nearly every state requires car owners to carry bodily injury liability, which covers costs associated with injuries or death that you or another driver causes while driving your car. Property damage liability is another one, which reimburses others for damage that you or another driver operating your car causes to another vehicle or other property, such as a fence, a building, or even a utility pole. In addition, many states require that you carry medical payments or personal injury protection, which provides reimbursement for medical expenses for injuries to you or your passengers. It will also cover lost wages and other related expenses. They may require also to have what they call an insured motorist coverage, which reimburses you when an accident is caused by a driver who does not have auto insurance, or in the case of a hit and run. It will also cover costs when another driver lacks adequate coverage to pay the cost of a serious accident. So despite the fact that personal injury protection and uninsured motorist coverage are optional in your states, consider adding them to your policy for greater financial protection. Note that auto insurance coverage are priced individually. So this is like that so that you could customize coverage amounts that suit your exact needs and budget. Finally, let's focus on personal liability insurance. Personal liability coverage protects you from claims related to bodily injury or property damage for which you are held legally responsible. It is perhaps the most integral component of your homeowner or renter's insurance policy, protecting you from expensive litigation or medical bills in the event you are held liable for bodily injury or damage to someone's personal property. Liability losses are often the most expensive home insurance claims, sometimes amounting to hundreds of thousands or millions of dollars. A single lawsuit could find that you are legally responsible for paying the medical expenses, pain and suffering costs, legal costs, and a multitude of other reward money to the injured party. So keep in mind that when a judgment is made at the conclusion of a lawsuit, your entire net worth could be at risk. So you will need enough liability protection to cover your total combined assets. If you own a home, a few cars, and a boat, and the limits of your owner's insurance policy, your automobile insurance policy, and your boat insurance policy are not high enough to cover everything, you may want to look into additional coverage to increase your liability limits beyond your home, auto, or boat policies liability limits. Now, when it comes to personal liability insurance, the first thing to understand is that personal liability coverage covers your general liability and not simply liability attached to the insured property. With personal liability coverage, you are protected from liability occurrences away from your home as well. So now, if you happen to have a pool, a dog, or even a trampoline on your property, you may want to consider even higher limits. So what does personal liability insurance cover? Personal liability coverage, personal liability insurance covers your current and future assets if you are held legally responsible for damages, including bodily injury or property damage. It pays for everything from lawyers' fees to medical bills to lawsuit judgment that stem from an accident or negligence. It also covers insured family members and members of your household for their action on and off the premises. So situation like dog bites or property destruction caused by your dog, bodily injuries to employees of your residence, bodily injuries or damage caused by employees of your residence, guest injuries on your property by accident or negligence, accidental damage to someone else's property caused by you or a family member are covered by your personal liability insurance. So what is not covered by personal liability insurance is so while your standard homeowner insurance will cover certain personal liability claims, there are other claims that may not be covered, such as liability resulting from a car accident, which is typically covered by your automobile insurance, bodily injury or property damage caused intentionally by you or a family member in your home, and also injuries or damages sustained by you or family member in your home. So be sure to carefully review your home or renter's policy so that you have a solid understanding of what is and what is not covered by personal liability insurance. If you don't currently have personal liability coverage for your home, consider getting it. Okay? Choose the personal liability policy limits that are right for you and start getting the coverage you need, particularly if you have a pool, a dog, or a trampoline. So let me do a quick recap. I shared a lot of information, I know, about who and what you should protect, as well as the type of insurance you should have. You must protect your life, your family, and your income using life insurance, disability insurance, health insurance, long-term care insurance, and personal liability insurance. You must also protect your property and must have homeowner or renter insurance and auto insurance. And I did mention personal property insurance. I'm going to leave you with this last point. Life turns on a dime. One can never predict when insurance will be needed. Many people only purchase insurance when it is required, like when they are buying a new home or a car. And I could tell you, paying for insurance now can be an important safety net if the unexpected happens. Remember that the real benefit of insurance is to reduce the financial risks and give you the support you need when the unexpected happens. So, before I forget, let me share my contact information. You could reach me